Look, everyone is going crazy for Nvidia, and hey, for good reason. But let's be real, with any massive tech boom like this, betting everything on just one winner is, well, it's incredibly risky. So today, I want to talk about a different way to play this. We're going to look at investing in the essential, physical backbone that this entire AI revolution is being built on. All right, let's get into it.
You've probably heard this quote a million times, but I'm telling you, it has never been more relevant than it is right now. This one simple idea is the bedrock of a really powerful investment strategy. It makes you ask the most important question: who's supplying the tools for this digital gold rush? And that's where this picks and shovels theory comes in. See, instead of trying to guess which AI model is going to win out 10 years from now, which is basically impossible, you invest in the companies that all of them need just to exist. It's a way to get a piece of the entire sector's growth while protecting yourself if any single company goes bust. Now, here's where it gets really interesting. Let's take that analogy one step further. Okay, so Nvidia is selling the high-tech shovels. They're amazing GPUs. We get that. But where do you put all those shovels? Who is building the massive, power-hungry sheds to house all of that gear? And that one question, right there, leads us straight to the two biggest infrastructure bets in my portfolio. First up is my value play in a sector that's just defined by insane growth: advanced micro devices. You know them as AMD. While the entire world is mesmerized by the market leader, I think the real, sneaky opportunity is with the challenger. And just so we're clear, this is not a small speculative bet for me. My conviction here is backed by a position that's sitting at over 17,000 pounds. This is, without a doubt, the core of my AI infrastructure thesis. My whole case for AMD is actually pretty simple. I am betting on a duopoly, not a monopoly. The market seems to think AMD is somehow failing just because it isn't Nvidia. And that, to me, completely misses the point. You have giants like Microsoft and Meta who are practically begging for a viable alternative. Why? Because it gives them bargaining power, and it makes sure their entire business isn't dependent on one supplier. AMD is the essential number two, and that makes it the value play in a ridiculously expensive sector. All right, so that's the chip side. My second bet takes us right onto the construction site of the AI revolution. This is the builder play. We're talking about a company called Nebius Group, which is out there physically building the data centers. And again, this is a high conviction play. We're talking about a position worth over 10,000 pounds. The logic is just super straightforward. If AMD is providing the brains, Nebius is providing the skull for those brains to live in. And this just perfectly shows why this company is so important. Nebius is a pure play on the cloud and data centers. They build the actual GPU centers. And our thesis here was just validated in a huge, huge way when they signed a multi-billion-dollar deal with Meta. I mean, think about that. A single deal that could be bigger than the company's entire revenue from last year. It's absolute proof that they're a key player in this whole AI build-out. Okay, so we've got massive growth, we've got huge contracts with the biggest tech companies on Earth. It all sounds a little too good to be true, doesn't it? And whenever an investment starts to look this perfect, you have to hit the brakes and ask yourself, what's the catch? What's the one thing that could just completely blow this whole thing up? Because with these hyper-growth companies, there's always a price to be paid for all that potential. And trust me, understanding what that price is, well, that's what separates disciplined investing from just pure gambling. For a company like Nebius, the number one risk isn't the competition or the technology, it's this little thing called dilution. See, to build these multi-billion-dollar data centers, they need a ton of cash. And if they raise that cash by just printing up and selling new shares, well, my existing shares suddenly become a smaller piece of the total company. My slice of the pie gets thinner, even if the whole pie is getting bigger. Now, to keep my own biases in check, I run my thesis through an AI agent I call Mary Jane. Her only job is to poke holes in my arguments. So I ask her to forget the hype and just find the single biggest risk. And her answer was instant: dilution. She pointed out that Nebius' spending is projected to double next year, and they just won't have the cash flow to cover it. That makes issuing more shares, well, highly likely. This is the part that could really keep an investor up at night. So, knowing that, what do? For me, the answer is to reframe the risk. Yeah, dilution stings in the short term, but for a company that's in this massive land grab phase, I see it as a necessary evil. It's the cost of entry I'm willing to pay to be part of what could be a decade-long hyper-growth story. So, that brings us to the final decision. When you add it all up, between AMD and Nebius, this is a nearly 28,000-pound bet on the future of AI infrastructure. With the biggest risk now staring me right in the face, I had to decide what to do next.
As I see it, there are really only three logical paths. Option A, trim the position, take some profits off the table. Smart, right? Option B, double down, basically betting that the growth will crush the dilution risk. Or option C, do nothing. Just hold on and monitor the situation to make sure my original thinking still holds up.
For both positions, my decision is option C. I'm holding and I'm monitoring. Why? Because the core investment thesis that the world needs a massive physical build-out of AI infrastructure, it hasn't just held up. It's been powerfully validated by the actions of customers like Meta and Microsoft.
When you boil it all down, this entire strategy really comes down to one fundamental belief. I am betting that the real, tangible construction of data centers, networks, and raw computing power will continue long after the current AI hype cycle fades away. This is a bet on steel and silicon, not just on software. Look, it might not be as exciting as chasing the next flashy AI app. I get it, but investing in the essential plumbing of a technological revolution has proven to be an incredibly powerful strategy, time and time again. Infrastructure can definitely be boring, but very often, boring is what makes money.